This week, a lot of focus will once again be on the euro with important growth numbers scheduled on Thursday. In this video, we'll discuss our current bias for the euro and we'll also explain how we can potentially trade the euro this coming week. Hey guys, Arne here from Forex Source, where we help you to trade and understand the currency markets better. Now, on this channel, we do a lot of educational trading content specializing in fundamental analysis. So if you're new here, definitely consider subscribing. Well guys, welcome to another week ahead video. This week's video will cover the trading week from the 19th to the 23rd of August 2019. Now for this week we have very important economic growth data due for the Eurozone, which is PMI, Flash PMI numbers for France, Germany and the EU, which is scheduled to release on Thursday. So let's jump into the video to see how we can prepare and possibly trade these events. Okay guys, now our main focus point for this week is a possible trading opportunity on the euro. We do hope that some of you guys were able to bank some pips from the euro-yen short calls that we had for last week's week ahead. There was a couple of opportunities to go short on the euro-yen, and we hope that you guys did bank some pips on that euro-yen trade last week. Now, in terms of the euro coming up for this week, guys, the odds are definitely still stacked against the euro, and thus our current fundamental bias for the euro remains bearish. We have continuous deteriorating growth that started out of the EU from the start of 2018. And that has been one of the main reasons for the ECB's dovish tilt, especially the recent changes that we saw in the monetary policy, which basically prepared the markets for further policy easing, which could be set in motion from as early as September, which is next month. Now, last week we also had something interesting. We had ECB's Rehn coming out, which basically just added fuel to that fire, saying that the ECB should rather overshoot than undershoot on new stimulus measures. And furthermore, he said that it's important that we come up with a significant and impactful policy package in September. Now, after these comments, the euro saw a lot of downside, and that has basically given the market renewed speculation that we might see a bigger rate cut of 20 basis points, which might be on the cards versus the already priced in 10 basis points that the market is expecting for September. Now, last week we also saw a batch of very worrying data in terms of the growth picture for the EU. We had the German Zew Survey fall to its lowest levels since 2011. And as the Eurozone's biggest economy and strongest economy, this is definitely a cause for real concern. So coming into this week, guys, the main focus point for the euro for this week will be Flash PMI numbers due on Thursday. We have PMI manufacturing numbers in July, which actually continue to show that downtrend, coming in at 46.5, which is well into contractionary territory and actually at a 6.5-year low. So manufacturing PMI is definitely something we need to look at. Going into this week, the markets are expecting both the manufacturing and the services PMI numbers to drift lower. Now that is significant because the services PMI number is actually one of the numbers that has stayed very resilient versus something like the manufacturing. So if we also see that services number starting to roll down and move into closer to that contractionary number of 50, that is something that can be very market moving. So in terms of expectations, we have EU Flash manufacturing PMI expected at 46.2 versus a prior of 46.5, and we have EU Flash services PMI expected at 53 from a prior of 53.2. Now, this week, markets are expecting those numbers to be lower, so that is something we just need to keep in mind going into that event. Also on Thursday, we have the release of the previous ECB meeting minutes coming up. Now, after ECB Rehn's comments, guys, as well as the deteriorating growth that we saw with the Zew numbers, we don't think that the ECB minutes will be as important as always, but it is something that we do need to take note of and take care of if we do decide to trade the euro this week. Now, the best way to look for a possible trade on the euro this week would be if we have a further miss in the PMI numbers, as that will raise the market's expectations of an even bigger stimulus package. Some are calling it the possible bazooka stimulus package coming up in September. So if we see that further miss, that'll just add fuel to that fire and add to the market's expectations of that even bigger stimulus package from the ECB in September. Now, if we do have the unlikely event to see a very big positive surprise beats in any of the PMI data, we could look we could wait for the euro to rally on top of those better than expected numbers, but that will only offer us an opportunity to sell the euro at better levels, as that won't change the fundamental bearish bias that we have on the euro. Something also to take note of for the euro this week, guys, is the political turmoil that we see in Italy. If we have any further political turmoil from Italy in this week, that could also put further pressure on the euro. Vice versa, if there's some sort of a positive breakthrough, that can obviously be supportive of the euro. So do keep any changes that happens from Italy in the back of your mind when we look at the euro this week. So now that we understand the fundamental reasons for why we're going to look at the euro this week, we can look at the charts and some of the technicals. Now, in terms of a currency pair, guys, if we do see that bigger than expected miss in the Flash PMI numbers for the EU, we could look to short the euro against something like the dollar. Something that is important just to note is that it won't only be the EU numbers, the Flash PMI numbers for the EU that will be important. We need to look at the numbers for France, as well as Germany as well. They come out just a little bit before the EU numbers. So take all of those numbers into account. If we see massive misses in the French numbers, which normally comes out first, that can actually start the selling already on the euro if we do have a very big negative deviation. So make sure to check the France and the German numbers as well as the EU numbers. Now we can look to pair the euro against something like the dollar. Reason for this, guys, is that the recent data that we saw out of the US, we had CPI numbers which came out much better than expected. We also had retail sales and retail sales control group which came out much better than expected, as well as the Philly Fed index which also came out better than expected. So a lot of the US data has been very positive lately and shows that the US economy is holding up much better than the markets are currently pricing in for the Fed. I mean, if we look at what the markets are expecting or pricing in, they're roughly pricing in about 4 more rate cuts from the Fed, which looks a little bit overdone given the recent run of positive data. Now, this week, we also have 2 important events for the US dollar that we do need to take note of. We have the FOMC meeting minutes, and we also have Jackson Hole. Now, if Governor Powell sticks to the same narrative, the more neutral narrative like he had at the previous FOMC meeting, there is definitely room for dollar bears to be disappointed this week, which could add even further downside to the euro US dollar pair. So that is the pair that we're going to be looking at for this week's data. And now moving on to the euro US dollar currency pair, guys. On the H4 chart, we can see that we have an interesting zone, a shorting zone on the charts between that 111.20 and 111.60 price levels. We also have confluence with that 111.50 price level, as well as the 38.2 and the 50% fib, as well as this previous support coming in at 111.20. Now, a move back into this overall zone over here, guys, could provide us with an opportunity to sell the euro US dollar pair with a safe place for a stop loss just above this most recent swing high, which will place it just above that 112.50 price level. Now, a possible place to look for a profit target would be this most recent fair value area, if we just mark this on the chart, which is also coming in very close to that 110.50 level. So a possible profit target just above this level could be something to look at. Something just to keep in mind though, guys, is if the market does take out this low, if we just go up to the weekly time frame, we can see there's not a lot in terms of support to really keep the pair above these levels. So this is really a significant area for the market to be in at the moment. If we do see a break lower, there's really not much to stop the pair from going even lower than this. So that is something just to take note of this week in terms of a possible profit target for the euro US dollar pair.
Hey guys, question of the day. Is there anything about the fundamentals that you would like to understand better and would like us to make a video about? Let us know in the comment section below. And as always, if you find these videos helpful, please remember to click that like button and that share button, as it really helps YouTube to suggest more of our videos. We hope every one of you will have an awesome, profitable trading week ahead, and we'll see you guys again next week. Cheers.